Hi, and welcome to an early global view. It's currently 7:45 a.m. on Thursday, June 9th, 2016. We wanted to wait until the U.S. fixed income futures were open so you could directly see how those were performing. And we have to say the data is still mixed, although the trade data has been weak. And that's important regarding last week's sign that international merchandise trade was accelerating down from the weakness that it showed over the previous several quarters in the first quarter of 2016. And that's all part of the weak underpinnings of the global economy. We see that in Japan. We'll be looking at the Nikkei, of course, and we'll be looking at Europe, but this was brought home by a speech by Mario Draghi early this morning where he stressed the weakness of trade was part of a lack of structural reforms. And we have said for some time that lack of structural reforms is ultimately what is going to defuse any of the constructive efforts of the central bankers, even with these very low to negative interest rates. So what's the quick take on the market in that context? Well, first of all, the S&P 500 future is off 8 at 2110. That's kind of important because it was right up near some important higher resistance, that significant congestion from spring and summer of last year at 2120. Finally made it back up there after stalling at 2105 back in April of this year. The next higher resistance, should it try to push above that, is the all-time 2132 high left in May of last year. And if you're looking for lower support, of course, the first place is that 2105 high. We've left as the top end of the Fibonacci area there because it shows in part, as we expand this chart, that even on the overall sell-off into April, this market never, into May, this market never really quite got below that 2023 Fibonacci 1/3 retracement. And the next lower supports are, of course, the 2085, the resistance it pushed above that it respected so well after pushing above it after a gap higher back on May 25th, and the 2075 previous close that was also a pre-existing resistance area on the congestion, as we'll see on the intermediate term charts. And that pretty much does it for the quick take on the S&P 500.